Hey guys, RC Peck here. Oh my God, is there a lot to talk about? I have my notes here. I'll jump behind the screen in a minute. But oh my gosh. So first of all, how can we not ignore that every piece of bad news coming out, the market loves? I mean, the worse the news gets, the more the market loves it. So we're going to talk about that. Um, we're also going to talk about gold because gold's been going up. All right, gold's been going up. I'll show the price chart of it, but silver has not been going up, and precious metal mining shares have been not going up. And in fact, precious metal mining shares have been slammed. I mean, the amount of volatility that precious metal mining shares have seen is something that I don't think I've actually ever seen it. And I went back and looked at all the data, and just the amount of price violence in precious metal mining shares, I think, is the highest ever. And I want to talk about that. I also want to talk about share buybacks because I don't think share buybacks are going to come back for a while. We're, of course, going to talk about the Fed and just the craziness that is going on over there. And I also want to talk about the indicators and have we bottomed, and if we have, what we do about that. And I want to also talk about low volatility, a low volatility index. Now, before we get to that, I do want to show you my fingernails. It has been, so my daughter's 9, and I think the last time she wanted to paint my fingernails was probably when she was 4. But here's something, because of COVID, my kids are home a lot with me and their mom, my ex-wife. And so yesterday, my 9-year-old said, "Dad, I want to paint your fingernails." I was like, absolutely. So I got them painted. And the other thing is this ring. This is actually a sleep ring. I bought this ring probably 9 months ago, and it's called an Aura, and I'm a freak about my sleep. And so what it does is it measures your sleep, it measures the quality of your sleep, it measures how much deep sleep you're in, how much REM sleep you're in, how much light sleep you're in, what your heart rate is. And I love the information. So I finally got this working. My friend Michael, who never gets shut down or when it comes to technology. When it comes to technology, I oftentimes can get easily confused. But anyway, so I got my ring on, and I've been tracking my sleep for the past week, and it is just awesome, awesome, awesome. And of course, I have my magic fingernail colors going. I didn't get to choose. My son gave me I don't know if you can see it, it's a smiley face on my thumb. So I got the smiley face going on my thumb. But let me do this, guys. Let me get behind the price charts and let's get into this. Please go ahead and subscribe if you have not yet subscribed. Leave a comment if there's something you'd like me to talk about. And lastly, I'm going to pin a link to the top above the comments. It's for a $95 coaching call. So what this is we get on a phone call. We do a screen share, and you tell me the symbols you own and tell me about your portfolio. And in that $95 phone call, I'm going to point out to you at least one place where you're leaking greatly or where you could easily make a small shift. So if that phone call is not worth $95 to you, and I think it probably should be worth $950 to you, if not $9,500 or $95,000, I'll just give you your money back. The whole point is to show you what financial coaching could look like to your own portfolio. So that is just at the top of, it's pinned above all the comments, and you can just click on that. It's a $95 coaching call. Okay, now give me a second, guys. Let me jump behind the computer because there is so much to talk about. So give me a second and we'll do that. All right, guys, I am behind the computer. I'm behind price charts, and we have a lot to do. So look, if something comes up or if there's a question that comes up or you want more clarity about something, go down to the comments and say, "Hey, RC, what about this?" Or, "Hey, you lost me with this," or, "Hey, could you talk more about this?" So look, the first thing we absolutely have to talk about is this is the S&P 500, and I have 3 moving averages on here. I have a 50-day, a 100-day, and a 200-day. Now the 50-day is the blue, and actually, let me get rid of this thumbnail because we don't actually need to see a thumbnail. Right here, you have the price getting back to the 50-day moving average, and then the red is the 100, and then the green is the 200. Okay, first of all news is now good news. All news is good news. 3.3 million people file for unemployment, 5x larger than the biggest weekly number ever in the history of the United States in 244 years. Woohoo! The market goes higher. The following week, 6.6 million people file for unemployment. The market goes higher. The following week, that's last week ending April 4th, another 6 million people apply for unemployment. The market goes higher. Every piece of news, in fact, the worse the news, the more price goes up. And this can be absolutely angering and maddening to people. But this is what's going on. The market doesn't care about our feelings, right? And what the market is doing is it's saying, well, look, Jerome Powell, whether it's right or not, and by the way, it's wrong, but whether it's right or not, because the market doesn't do right or wrong. The market goes, well, look, Jerome Powell, who's in charge of the Fed, he's not telling us anymore like, oh, I'll print 100 billion or I'll do 1 trillion over the next year. He's got free reign to print as much money as he wants, where he wants. He's buying high yield ETFs, corporate ETFs. He's doing what Japan and Switzerland have been doing. Our country is now buying exchange traded funds immediately, right? They have immediately backstopped corporate bonds and municipal bonds. And you might go, well, that's good, right? Because I have some money in corporate bonds. No, you got to let these companies fail that need to fail. That makes for a healthy, right? Healthy country, healthy place to live. And the problem is when the market is going higher, we live in a capitalistic market. But when the market is going lower, we live in a socialist market, right? We socialize the losses and we privatize the gains. And that's what's going on. And it is absolutely maddening to me. But that's why the worse the news, the more the market's going up. So if you've wanted some clarity around why the heck would the market go higher when there's 15 or 16 million people unemployed, and by the way, that number is not going to drop this week to 500,000, right? 2 weeks ago it was 6.6. Last week it was 6 million. So what's it going to be this week? 5 million? All right. We are talking a place that we've never been in. And what I've noticed is when the government wants to help corporations, they get immediate help. When the government wants to help individuals and small companies, they have to wait in line, fill out a lot of confusing forms, get confused, hire people to help them, get confused more, and then in like 4 to 6 weeks, maybe they'll get a check. That's how the government is doing it right now. So if there is absolute madness going on in your brain, these are the reasons why. Okay, now, one would believe, and maybe I'll just keep the 50, the 100, and the 200 on here. But here's gold. Here's a price chart of GLD. And actually, let me just look here. Let me just look to see. Okay, gold. So I'm doing this recording close of market on Thursday, April 9th. So this is a price chart of gold. Looking again on here's the 50, the 100, and the 200-day moving average. Now, I just want to say to you, those are not the best moving averages. Those are kind of the default that all charting software comes with. There are much better moving averages to use, and it's one of the things I train my people to do is to have a much better moving average. But here's the point. Gold went sideways when the market went sideways. It has woken up and it has broken above this point. It has broken above that. So I'm going to zoom way out. I may take the moving averages off just because I want to get a clearer picture, but let me just zoom out here and look at gold. Now this is actual gold, and I do want to take away price charts because it's just, we don't need that data right now. So I had said for a long time that gold over 1385, you had to be bullish on it. The next place it was going to get a lot of resistance was this kind of this 1550 to 1600. And it had that, and it had extreme volatility around that. So the next place gold wants to go is $1,800. So gold is doing well. Now, there have been two big holdouts. One has been silver, and I mean a really big holdout. Like, you look at this price chart, you go, this isn't even precious metals. Like, I don't know what this is, but this cannot be in the same sub-asset class as gold because this thing is down or sideways or down. And silver had a huge clean out. It broke below the $14 mark, right? Look at this huge clean out right here. And that scared the hell out of a lot of people. But it did it very quickly, and now it's back into its range. So the number we really want to see silver get above like this $19 mark and stay above it. And it's really marching towards it right now. So silver sat up finally, gotten off the floor. It was kind of left for dead. And so that's a good sign. And it could be all this incredibly silly, horrifying, rageful money printing that Jerome Powell is doing to protect publicly traded corporations. Shame on you, Jerome Powell. And then I want to show you GDX. GDX, which is the precious metal miner ETF, got taken to the woodshed. This volatility right here has never been seen before in the precious metal mining world. Even when the market fell and when precious metals fell, it never had this much type of price violence. But again, look here. Once GDX gets above, I'm going to call it $31, we could absolutely see an explosive move. And guys, part of me doesn't want to say that because I sound like I'm selling you a pick of the month newsletter, but the amount of look at below the two blue horizontal lines. Like that $31 has been hit so hard that there's a point where that ceiling becomes a floor and that it's going to want to get back up to about $63, which is about 100% above $31. Now, yes, there's going to be some resistance in here right around the $38 mark. But I really do think it's when this breaks loose above the 31, this will be finally the world going, you know what? That money printing was kind of okay in 08 and 09 and 10 and 11 and 12 and 13 and 14 and 15 and, 16 and 17 and 18 and 19. But, it's been 12 years now and it's not okay anymore. And yes, you could see GDX bottomed here in 2015, but guys, this has not been clean at all. This has been heartbreaking. It's been very difficult, painstaking, but it's very likely that gold, and when I say gold, I probably should say precious metals, which means gold, the metal, silver, the metal, and precious metal mining shares are going to finally stand up and go, Jerome and Yellen and Bernanke and Trump, because you got to believe absolutely Trump's yelling at Powell saying, I'm going to fire you. Whatever type of shaming he's doing, he's absolutely doing it. Because guys, if the stock market is lower on election day, the likelihood of Trump winning drops precipitously. So he's kind of betting that if the Dow Jones is higher, he'll get reelected. So the takeaway is gold is starting to care again, finally. Okay, now I want to go back to SPY, and everyone has their own price chart that they look at, but I follow the S&P. It's the most followed index on the planet. I just want to show you a couple things here. So this is what we got going on. Oops. Can I do it again? Yeah. This is what we have going on, right? We've got this huge extreme move right here. And then right in the middle is kind of, let's say, well, right in the middle would be that, but I'm looking at price now, and there's so much resistance up here. So we've got this huge resistance coming up. Now, I showed you it was the 50-day, but we're also at about a 50% retracement from this move. So we're not out of the woods yet. I'm going to talk about the bottoming indicators, but we're not out of the woods yet, because even if I take this away, we're in this mess. This is just a huge, messy mess right now. And one of the things I've been thinking about is, what does the world look like without share buybacks, right? And the question is, well, RC, that doesn't matter anymore, because Jerome Powell is going to be buying equities. And you got to believe if the price falls down, this is SPY, if the price falls down to 225, Jerome's going to be like, all right, I'm just going to start buying the S&P 500 via SPY, IVV, VOO, whatever it is. I'm just going to start buying that too. And guys, that's on the table now. that everything, he's just going to buy everything. But if you look at this from this point of view, we are absolutely in a messy mess. There's going to be a point in time where the market stops looking at dead bodies from COVID-19 and starts looking at, well, wait a second, who goes on a cruise today, right? Who's going to go on Carnival Cruise if you don't know if you're actually going to be let off, right? Because maybe you just won't be let off a Carnival Cruise because if too many people get the virus. Let me bring up Carnival Cruise now. And I'm going to pick on Carnival Cruise, but we can use it for United Airlines. Like, who's going to get on Carnival Cruise or any cruise, a Disney cruise, if there might be a 10% chance you're on that boat for 1 month, right? Who lets you off, right? So I don't know how Carnival Cruise recovers or what recover looks like. I think it's pretty safe to say that the cruise industry, the hotel industry, the fly people around the world industry, I think for sure the airline industry, and I'll just bring up United Airlines, for example, I think there's structural loss, right? So let's say United flies on any given day 600,000 people a day. Just any given time around the world, they're flying about 600,000 people. Do you really think it's going to go back to 600,000 post-COVID? That to me, that gets filed in the folder called hell no, right? Because if you did 10 business trips a year, guess what? You just figured out you can drop it to 8 business trips a year. And that's going to go on across the entire corporate world. We're like, wait a second, we don't actually need to travel. Wait a second, all those sales calls we used to do in person, we now do screen shares to do sales calls. So those 20 flights for sales, maybe I only need to do the ones that get to this point in the sales process where I then finally fly out to see them. So maybe, instead of 20 flights a year, I drop it to 10 and I put the rest into my $9 a month Zoom service. So we're going to see structural change to the Uniteds of the world, to the hotels of the world, and to the Carnival Cruises, right? Those are just 3. They don't ever come back. They don't because people's behavior will forever be changed, right? And so we're going to see structural change to how people behave, right? All those moms and dads who got to escape to go on air quotes corporate trips, to get a break from their kids, they're now having to stay home and be around those kids and deal with their big feelings. That, of course, has nothing to do with this. But structural change is coming, and we will not go back to normal. There will be a new normal after this, right? And I'm not even talking about if deaths pick up in September, does the world shut down again? I mean, that's the scary thing. Like, there's been a precedence that's been set. And instead of quarantining the at-risk people, right? Instead of quarantining the 1% at risk, every old person's home, every person over the age of 60 who has asthma, heart disease, lung disease, kidney disease, they get quarantined. What the world has done is gone into this huge experiment where all the healthy people get quarantined. And if you're a hairstylist or a dentist or a chiropractor or a massage therapist, any business where you have to see the client in person, you've been absolutely run over. And I know a thing or two about dealing with people's emotions and finances. That's what I've been doing with my coaching business for 2 decades, right? Because when people don't know how to grieve around anything, but let alone their money or investments, it doesn't come out in positive ways. So all of the chiropractors and hairstylists and dentists and individual doctors that are not part of big Kaiser-like or UW, University of Washington-like organizations, their business went to zero. And even if they have 2 million in the market, they've just had the rug ripped out from under them. And that's emotionally painful because now It's like if one of your parents was a drunk, right, and you never knew who you were going to get when you came home, the nice dad or the nice mom, or the drunk dad or the drunk mom. It's kind of like you don't know now what the government's going to do. Are they going to shut everything down again? And that creates a lot of anxiety, stress, and worry. And that changes the behavior of people. That changes the behavior of how people buy. So that's what's going on. Okay, here is a price chart. And I'm going to wrap this up in a moment. And then, but before I do that, I'm going to show you the divergence indicators and talk about what's going on. So guys, this is a ETF called the S&P 500 Low Volatility ETF. Now, you betcha the people buying the low volatility ETF are people over the age of 60 because they read the words low volatility, and because they've never been trained to look at price charts, right, and know what's really going on from a visual point of view, from a pattern recognition, they said, wait, I want low volatility. I'll be in the market. I'll be in the stock market, but I want low volatility. And so they bought a low volatility. The problem is this low volatility index, or ETF, it fell 37%. It fell 37%. Guys, the NASDAQ, which is supposed to be the crazy, crazy, crazy dangerous place, right? Let's just compare it with the crazy dangerous thing. The NASDAQ fell 29%. So that safe place, that safe haven, fell 33% harder, farther, more pain inflicted on those people because they were never trained on how to use pattern recognition and not get hijacked by words, but to understand how to invest based on pictures in your pattern recognition brain. And so it's just another example of where people unnecessarily hurt themselves, right? They're boating around in their financial portfolio, their financial boat, and they're dragging around a bunch of anchors. And they just can't understand why they're taking on so much water and why their boat is going so slow. Because they don't know their anchors. They think they're life vests or sails, but they're not. And that's why people are inflicting unnecessary additional pain on themselves. Okay, guys, almost there. And let's go look at the indicators that I've been looking at for the last 3 weeks, just to see what they are doing, what they are telling us. And then we can do a takeaway from this, and then I'll get you guys out of here. Okay, so this first indicator is the new highs for the New York Stock Exchange. How many new highs are happening on the New York Stock Exchange? And the answer is not really any. 6% of the stocks in the New York Stock Exchange are making new highs. Now you can see back here in 18, it's just one reference. This was a slow indicator to break above the line because the market already had bottomed. So this will be probably one of the last indicators to turn bullish. But for right now, let's just say this is for sure a no. Okay, now let's look at if the New York Stock Exchange is making new lows, right? And so this is new lows. You want this black line to be below the horizontal. So let's just zoom into this. So this is, again, looking at all the stocks in the New York Stock Exchange. And we want this up here. Sorry, I wasn't clear. You want this black line to be above this, below this horizontal line. And it is. So that means we're not getting new lows. We're not getting new lows. So that's one for yay. We have one indicator that's on our side and one that's not yet. Okay. Now we go to the S&P 500 and say, how many of the S&P 500 stocks, what percentage of them are above their 200-day moving average? And the answer is 17. About 17% of S&P 500 stocks are above their 200-day moving average. Guys, we want to see that number at 20%. We want to see, to really get more confident, we want to see the 200-day above, right? We want to see 20% of the S&P stocks above their 20% mark. And right now, we're getting there, all right, but we don't have it yet. The next one is, sticking with the S&P, what percentage of S&P stocks are above their 50-day moving average? And this is looking at this indicator back to 2010. I'm going to zoom in so we can just look at it. And we can see that 17% of the S&P stocks are above their 50-day. So we've got a yes on this one. So we've looked at 4 indicators. We have 2 saying no, and we have 2 saying yes. Again, this is giving us an idea of kind of how wide this correction is. And what's interesting, every correction or crash or fall is different. And what's been different about this one is no one's ever gone from 100% income to 0% income. That's never happened before. The Fed has never come out and just said we're printing trillions, but we're just going to keep printing, and we're going to come up with new programs and keep printing, and we're going to be buying corporate ETFs and high yield bond ETFs and muni. We're just gonna buy. So that's also never happened before. We've also never had a complete shutdown of the economy. So that's never happened before. We've never had unemployment go from normal numbers to the worst ever by 10x the number. So there's going to be a point where the market does stop looking at fiscal stimulus and monetary stimulus. Right now it is. I get that. There's going to be a point where it actually looks at earnings, and we're going to say, oh my God, like that's how bad it is. And there's going to be huge cloud cover for corporations. And hear me, GE and all the crap companies out there are going to drag out every financial dead body and just bring it all out now, clean it all out now, and dump it in this quarter's earnings. They're just going to bring it all out for Q1 and Q2. So get ready for just an absolute, shit show of corporations dumping all their bad news out. But right now, the market is just looking at the worse the news, the more the printing. And that's what's happening. Okay, so we got stocks. 17% of the S&P stocks are above their 50-day moving average. And then let's look at the advanced decline line. So how many shares are advancing in the New York Stock Exchange and how many are declining? And again, let's go ahead and zoom in to just look at this. So this has stabilized also. Again, the top, every chart we've looked at, the bottom is the S&P and the top is the indicator that we're looking at. So this is one where I'm going to call it neutral. I mean, it's slightly above, but it's not a yes and it's not a no. It's kind of in between. The market itself has clearly made a bottom, right? So that's a positive. That's for sure a tradable bottom, right? You can buy when it's above here. If it falls below, this is the S&P. I'm looking at the bottom chart. The SPY falls below 260. That gets back into the, oh my God, I don't know what's happening. But as far as this indicator, the AD line, we're going to call this neither yes or no. It's kind of in between. And then I usually just do 5. I'm just going to throw in the VIX, which is the volatility index for the stock market. And we want to see this drop below that black horizontal line. And so as I zoom in here, you really want to see it drop below that. And when it drops below that, that really kind of gives us the all clear. So that one's kind of at a no right now. So of the 6 indicators, we've got 2 that are yeses. And we've got, I have to count them up, 1, 2, 3. We have 3 that are no's. And then we have 1 that is, let's call it maybe. It's a maybe. So that's where we are right now. Guys, you got to have the plan. How to get in, how to get out, have your procedure, have your checklist. It matters. Checklists matter. That's why surgeons have checklists. That's why I almost said people who fly airplanes. That's why pilots have checklists too. So guys, if you like this and you find this type of conversation of value to you, please go ahead and subscribe and forward it to your friends and family and colleagues. Also, please leave a comment. And if you find yourself going, what anchors do I have? What anchors do I have in my portfolio? And whether you've been investing for 5 days or 30 years, I have never met a portfolio where I did not find a lot of anchors that were hurting people. And the best risk reversal I can ever do is to say to you, look, let's jump on a phone. do a screen share. Tell me some of your symbols that you own. I'll tell you which ones are costing you unnecessarily more pain. And in that $95 call, you're going to have an experience of what money coaching can look like for you to have what I sometimes call extreme clarity. Hey guys, thank you so much for being in my world. This is RC Peck, and this is just another step in helping you bring that extreme clarity into your life, how to let your 9-year-old daughter paint your fingernails, or your 9-year-old granddaughter paint your fingernails, how to sleep really good at night. Because guys, even when things go sideways, when you have a plan and you're executing your plan, it feels worlds different from, oh my God, I don't know what to do. I don't know where the fire's going, where it's coming from, everything. That's a very different experience. And I just want you to know there's a better way. Okay, guys, thanks so much. I will talk to you soon. Send those comments. All right, guys, bye.